Hello, it is Monday the 2nd of December. It's a new month. We had a big new moon last night, and that's quite often a turning point in the market. I have to say that I'm a little bit nervous by some of these really strong bullish moves that we saw yesterday and this morning. Quite often, when markets have really strong moves on a Sunday night in Asian trading, we can quite often see a nasty pullback once the US markets get in and start moving. So we need to take a look at that. The most impressive one, of course, has been Ripple, which really is the new market. So we will take a look at Ripple. Now, a couple of weeks ago, I talked about Bitcoin, and I said that, and let's start with Bitcoin. I said that we had a bit of a problem going on, mainly because there was a big kind of call wall in the deribit options, and that often marks a very strong resistance level, and that's kind of what we're seeing playing out. Unless kind of we get a really ripper change in bullish sentiment for Bitcoin, then we were likely to see a little bit of pullback, and the range that I thought we would trade in would be between 90,000 and 100,000 based on kind of how these options are laid out. Now, I'm not sure. If I put my 236 fib retrace and look at where that potential support is from the summer low that we made on the 5th of August, then we could actually go a little bit lower than that. We could overshoot it down to 87,756. But for now, I actually don't think that this is, a kind of clear short either. I think that September just could be one of those really choppy months, where we trade sideways. And let's face it, we're used to that. We did it for 6 months from March in Bitcoin in a very sideways range. And the key thing, to keep the faith when we were in this sideways range is that we were making very clear 3-wave corrective moves. And when, a trending market doesn't kind of tend to come back into itself, whereas this choppy overlapping waves that we made said this was still bullish. So if we're going to stay bullish in Bitcoin, we're going to look for very similar patterns as we trade sideways in between 100,000 and 90,000, maybe a little bit lower down to 87,000. If we, if the bottom falls out of it, we could come all the way back here on the weekly to 80,000, and that would be the big 236 fib from the low lows, and we would still be in an uptrend and still well above this 20 moving average, because this rally in Bitcoin has been so strong. So sometimes the harder you fall, the stronger you rally, the harder you fall, and it's just still a correction, not game over. So when I used to trade FX, quite often December was a really dire month for trends. We would chop, go sideways. It was really not much fun as we wound down into year end. And then when that happened, what we tend to see was the beginning of January was a kind of out the gate, really strong, trendy moves. And so, I think that because we got here so fast, I think if we were to trade sideways, and build up a really nice range for Bitcoin, we should see a really nice trendy move out of the gate at the beginning of January, and that's what I am looking for. So more sideways, that means more sideways in MicroStrategy, and I really don't think this is the best, clearest trade out there at the moment. So let's talk about Ripple and where we are likely to go to. Now, if I look at Ripple, now, this is a big monthly chart of Ripple, and I want to say congratulations to all the people who held this, because it's been 6 years since we made this high in December 2017, beginning of January. So 84 monthly candles, and we have wiped out this sideways range, with this beautiful move from the lows. And you think, oh, who would hold Ripple all this time? I know so many people who have held Ripple, who just have a little bag of it and they just keep going, and well done to all of them. Now, the one thing I'm really worried about is today, we had a really strong bullish close, but yesterday was the 1st of December. So this was a Sunday move above a big target level. So if I measure from the lows that we made in 2020 to the high that we made in 2021, project that same distance from the low that we made here in 2022, the equal measured move level, big 61.8 level, was here around 2.09. And if I measure this wave 1 and project it from the bottom of this, what I think is a wave 2, we had a 2.618 here at 2.11. So between kind of 2.11 and sort of 2.14 for me was this target level, and we've kind of overshot it. We've overshot it in Sunday trading and early Monday start the week trading. So I'm going to be quite interested to see that this holds as support if we're going to keep going higher to the bigger upside targets in Ripple, which are at 2.643, and then the big retest of the highs here from 2018 at between 3.2 and 3.28. So this is pretty key support. And if we look at previous monthly highs we've made in Ripple, we've had really long tails and closed back underneath. And that sign that we did that with this really long tail is a sign of a bigger pullback. And so we need to make sure that that is not what is going on here in Ripple. So I'm looking, we could just round it down, you know, because the market could very easily with this level come back and look underneath. What we don't kind of want to see is it become resistant. So I wouldn't be surprised if we fell back further than that. But what we don't want to see is getting underneath this level and then it becomes resistance and we continue lower. So if that happens, you kind of really want to, if you've held Ripple for for all those years since that 2018, 6 years high, or since these lows, or you bought it after the lawsuit, you know, got settled and stuff, this is really kind of a time to maybe pay yourself and take some profit and look out for a bigger pullback. Now, where would a bigger pullback come to if that happened in Ripple? Well, if we take everything, let's hide a few things here. First off, let's say that if we reverse at a 61.8 fib with a big tail, the most likely pullback is down here at the 38.2. And we also know, let's take a lot of these other noises away. So if we measure from this low to this high, project it from here, if you reverse at an equal measured move, the back test of the 61.8 is key support. So that's at 143, and 142 is the 38 fib. And if we measure from the low that we made here, this is our first swing, that is also back tested this fib support at 145. So this is key support at 2.09, 2.11, and if we fall underneath it in Ripple, we are likely to see a bigger pullback. Won't be in a straight line, it'll be bumpy, likely 3 waves at least. Well, 3 waves most likely, but back down to 145. So if you're looking at this move in Ripple and thinking, well, how can I get in? If we come back to there, I think that is where you should be looking for opportunities. But if you've held it for 6 years and you see it drop underneath here, I would say pay yourself a little, you know, don't keep going. Now, what if we don't drop back underneath that 2 number and we do find support there and we do keep going? Next upside targets again, 2.64 and 3.2. So that's my bigger picture view of Ripple. Quite a few. Let's take a look at Solana as well, because Solana is very interesting. Whenever you're in a trade, previous swing highs and lows are always danger areas, and you see that a lot in crypto. You'll see lows retested and highs retested, but the highs from 2021, which is where we would like Ripple to do this, wouldn't we? Go all the way up and retest those highs. But here, for me in Solana, I think potentially we have completed 5 waves up from the low that we made in 2022. The problem is that when I look at this is very messy, this last swing. So when I see a big swing like this, for me, the key support all the way from the lows is going to be that 236 fib. and that is, let's line it up a little bit better, at 203. So we started a bigger pullback in Solana. I would, for me, in terms of Fibonacci pullbacks and retraces and stuff, as long as we hold above or find support from this 203 level, we are still in an uptrend. What happens if we don't, though? Well, when you can see 5 waves like this in Solana, the most common retrace is back to the bottom of this wave 4, which would mean somewhere between a 50 and 60% retrace of this entire rally, and back towards somewhere between 105 and 136, depending on how it unfolds. We would like to see it corrective, nice big 3 waves and so on. So really, this pullback that's begun in Solana, after, let's face it, you know, it's been an extraordinary year, is at 203, and I would be more concerned with a weekly close underneath there, or getting underneath and finding resistance. I think we could see a bigger pullback. What if we're going to stay bullish and it's just this little swing? Well, that would be a 38.2 fib retrace from this little swing. That wouldn't be weird at all. I think more likely, though, if that's it, is we could just come down. If we just came down to this 50% level of this from the August 5th low, and bounced hard there and closed the month back above, you know, I wouldn't be surprised if we came down here to this 50% and we bounced here. And as long as we close the kind of month back above this 236 fib level at 203, I would say that that is pretty bullish. I would look again for it to be support and correction over. So I'm not going to be too gloomy if we get underneath 203, but a monthly close underneath 203 this month, yes, I think we could start the year with a bigger pullback into the lower 100s in Solana. So that's how I'm seeing that one. Ether keeps underperforming, and I keep racking, you know, I kind of, you know, ETH I find very difficult, and stuff on ETH very difficult, and I keep wondering why, and why does it keep out underperforming, and what's going on. I wonder if it's these MEV bots. You know, if you think that ETH is underperforming Bitcoin by 35% and Solana and everything else that it should be keeping up with, maybe that's the profit margin that these bots are taking out of the market. You know, there's ways around them and you kind of have to pay the extra. But they make everything slower, and I kind of think that that's one of the major reasons for ETH underperforming, in my opinion. Now, third, let's take just this trend line high. So here we are in this consolidation in the middle from the highs that we made in 2021 to the lows. We're in that kind of 61.8, 38.2. We've been consolidation zone in the middle of this range. For me, third touches of trend lines are very often false breaks, and if the trend line is valid, I look for it to stay inside of the trend line, and that's kind of maybe what we're seeing here in ETH. So we may have hit a little bit of a roadblock here. If we keep going, which we could draw a trend line from the November 2021 high to the 2024 high we made in March and say, look for a false break retest and a retest of these highs. Then that kind of, we would look for a false break here. And obviously above here, we would say next swing higher underway. But at the moment, for me, this is a little bit of a tricky level. And I kind of look for patterns to repeat. So if we were to say, look for this high to low here, this really was a kind of 786 fib, and then we kept going lower. And if we look at this swing, here we are at this 786, and again, messily, any way you draw it from this high, maybe not, maybe we keep going. But I'm just kind of, it's one of those markets where high tide floats all the boats, and if everything has a pullback, this Ethereum will do too. And because of this little trend line rejection, I'm going to measure from the lows here, and the key support is going to be this 236 fib, which would mean that the whole of last week's rally gets reversed, and the first key support is going to be here at 3.372. So that's how I'm looking at ETH. If I look at it on lower time frames, it's not going to be a straight line, and if we think If we think Bitcoin is going to be choppy, then and ETH is the twisted sister, then it's going to be choppy in this one as well. So first swing lower underway. I think we've got 5 waves down. I think we should see a nice 3-wave rally to start the week here in ETH. And then I would look for a lower high and another swing lower before this is over. So I'm not, at this point, rushing in to buy ETH. Let's talk about Doge, which has been magnificent. And we will look at DogeGov as well, which is the kind of... Now this one, big picture, if we look at this on the monthly, I was looking at a 50% retrace from these highs to maybe be resistance, and we're holding above it, which is pretty cool. In Doge, it suggests that maybe we're going to keep going up to this 61.8 fib level next, which is at 0.487. Perhaps we are testing support here. And perhaps this swing from the lows in August is not complete yet. So there's a few ways I've been looking at this. Let's go down to the daily. And if I look at the price action here, especially on the daily, we can see that with this level, the first time we got to it, it was resistance. In fact, we kind of, and then when we got above, if we're going to break out from this nasty sideways choppy range that we're in Doge, we kind of need for this level to hold support and launch off it. And then that would be the next swing higher. Otherwise, you know, we could just say this is just a really choppy, ugly sideways range. This first high that we made when we got here on the 12th of November, we haven't been able to close above it on the daily. And so if we kind of duplicate it, let's just say that this is a choppy range that we're in Doge. So if we can find support here from 0.404, I'm looking for, and we can break and close above 0.43, then the next upside is 0.48. What if we close back underneath this 0.4 level today though? Is that the end of the world? No, just means we're going back to the bottom of this sideways range, unfortunately, in Doge. And we haven't quite, you know, got the breakout we wanted. And these false breakouts, I have to say, are a little bit of a bearish warning signal. And for now though, this level that we were looking at is holding very nicely. So it's not a terrible idea, but we really need to daily close above that 0.44 for the next swing higher in Doge. If you're trying it, you want to buy this and see, that's kind of really on the daily what you want to see if this move is going to have legs and keep going. Okay, I've got some few more interesting charts to look at today. Next one is Arbitrum. I need to find it. Got a few charts here, sorry. Here it is. Okay, why are we looking at Arbitrum? Because, as you know, how I have a lot of importance in a 236 fib. And if we look at Arbitrum on the monthly, this monthly closed above the 236 fib retrace level. That is from the highs that we made in 2023 to the lows that we made here in August 2024 when everything did. So this 236 fib level, 0.899, was pretty key. And so this is one where I'm looking at thinking, we need a 5th wave higher here if we're going to be super bullish. And is this one of the smaller alts that hasn't finished yet? Playing the catch-up trade. And so I'm looking at this to see, is this going to hold a support? Remember, we did get that monthly close above it, which we want to see. So that looks to me pretty good. And then if we can continue higher, you can see that we've got in the middle here a weekly moving average, which might give us a bit of trouble at 1.08, but 1.19 would be this next fib level higher, and these the swing highs, pretty interesting support level in Arbitrum. So I'm looking at this on the lower time frames as we pull back. So unlike Doge, I actually think this is one that does have pretty nice, you know, hourly 200 moving average. You can see that the hourly 200 moving average is usually pretty nice support and resistance in this one. And so this may not be a terrible idea. The only way this may not work is this looks like, you know, we may need a bigger three-wave correction. So if we don't make a new high here, as long as this holds support, I mean that we might see something like this before it continues higher. So it might need to establish a bit of a sideways range, but Arbitrum I think is a really interesting long. And Chainlink is one that I'm watching closely today as well, for pretty similar reasons. Now, big picture in Chainlink. So now I always look at fib patterns. And if we look from the all-time lows in 2017 to the highs in 2021, we bounce from an 886 fib level. For me, that makes a normally very simple fib pattern where I look for a three-wave move back to retest the 50% in the middle of this range, which would be here at 26.55. And I think that we have had our first swing and our three-wave pullback here in the middle. And if we can hold above 2032, we should continue to 26.55 in this one. And here, my only concern is that it's Monday morning earlier in the week and we're breaking out above this kind of interesting level in, you know, Asian trading before the US markets and the bigger markets open, and potentially this could be a spike and we could see a bigger pullback, and this could be a little fake out move. And because I like to play pullbacks, I'm going to wait and see on the daily if this holds and then buy pullbacks. Yeah, I think Link therefore has more upside, at least back to this 50% level. And this dinosaur move may not be done yet. Now, here's the thing with this fib pattern, this 886 fib pattern. If we close and hold above this 50%, the next target is up here at this 236 fib at 40. And this swing will extend. So here's the first target and second target. So I'm watching to see if that 20 level holds a support and we close above it in Chainlink. And I think this is another little one like Arbitrum that hasn't finished its catch-up move yet and may have some more upside. Sui is another chart that I trade quite a lot. And if we look at Sui, for me, if we look at it from the lows on the 5th of August, we've made 5 waves up here. And if we measure the first swing from May 2023 and we go from 0 and we measure to this first high, project from here, this swing is 1.618 of the first swing, which is very common for a wave 3. So potentially, if we, again, I'm going to draw my fib from this low. Where's key support? Because I've been long this one. The key support is the back test of this 127 low, or this 236 fib measured from the low in August. If we don't hold that as support, it's at 3.11, or if we get underneath it and it becomes resistance, we're going to see a bigger pullback in this one to somewhere at the bottom of this wave 4, somewhere between this 50% and 61.8, which would be in this box. Between 1.74 and 2.2, and a bigger pullback under the way, and I will get out of the way in Sui. So key support here that we've tested, you can see that we've bounced off it once and it was pretty good support. If it really needs to hold, otherwise again a bigger pullback in Sui. And quite a good leading indicator, you know, Sol and Sui and some of these start doing these bigger pullbacks, or if, for example, if Ripple closes, if this was a little bit of a false breakout and it closes back underneath that equal measured move level, we will see a bigger pullback in this market. Everything got a little bit frothy, you know, when you start seeing people, you know, when you start seeing people in the meme space, you know, beating their children, or or threatening to kill themselves. Everything has just felt like it got really frothy, and perhaps a bigger pullback is due, or perhaps just some choppiness. So Sui is, that's the level I'm watching this one. And the other one I kind of, if I can find it, where is Uni? Here we go. Key level in this one I'm watching. Now, big picture on the monthly, we can see that in Uniswap, we couldn't get although we traded well above this 236 fib level, we couldn't get a monthly close above it. And here we are testing it again. It's at 13.9. And so 13.9, again, in early Asian trading and Sunday, we are above this level. If this is a real breakout above an really important support and resistance level for me, we will close the daily and find support from this 13.9 level. Let's put the numbers on the right so we can see them. And if we do that, our next upside target, if we can hold above 13.9, is 20.44 in Uniswap, which is quite a nice big move. So I'm watching this on the hourly. It's literally, we've only just above it. I got an alert on my phone telling me, because it's one of those charts that I was watching. So I'm watching to see if we can hold above 13.9 and keep going in Uniswap. By pullbacks against it, and target will be 0.4. Target will be 20.44 next up. Okay, let's take a look at some of these meme coins that got a little bit, because we've seen a lot of measured moves and the trades I've done. And one thing you've got to remember about meme coins is if you didn't create the coin or you're not paid to be in it, then you are the exit liquidity. So the key to getting in and out is to beat all of those people that want you to be their exit liquidity. And that means don't get married to these trades, or think that they're going to go forever, or, because you can get out, wait for a pullback, and if it goes again, you can get back in again. Is that easy to do with any size in meme coins? No, it's not easy to do with any size, but it is, I think, an important part of it. Okay, so the first one, DogeGo, which has been mirroring Doge. I'm a little bit concerned about this one. Whenever I draw on a chart, I'm always the most kind of bearish or corrective bounce in this one, because this had a really big pullback. A corrective bounce would be a 3-wave measured move to the 50% most commonly, sometimes the 61.8. And so in this one, if we measure from the low that we made here on the 28th, this is a 4-hour chart, so it's not that long ago. Now, if I measure from this low to this high, which I showed in a previous video how to do that, you can see that we have actually paused. This was where this was 61.8, so this is 3 swings, and we've paused at that and reversed at that 50%. Now, when you do that, close it, fibs are like a ladder, right? Fib retrace levels. So here we got above this 236 fib, then it was support, and when we got above this 38.2, if we were going to keep going, we needed this 38.2 to still be support, and we're underneath it. For me, because mean reverting markets tend to keep mean reverting in DogeGo, that means the most likely pattern here is at least a move back lower to the 50% here in the middle at 0.256 in 3 waves. So, I could be wrong. We could just hold this highs and we're going to keep going higher, but that's what I'm a little bit wary of. Now, it does look not too bad because we've done 3 waves. We've pulled back to these hourly moving averages. Potentially, if Doge could find support here, as we talked about at that 50% level, find support and break out of the range and continue higher, then DogeGo is likely to do the same. They have been. But if we don't, and if we just rally 50% and we do another swing lower, I think that we do continue lower to 0.25 and maybe 0.23 in this one. So a shallow here, we've done 3 waves lower, which is pretty good. It means it's corrective. But if we just do, shallow 3-wave rally and continue lower, that's where I'm looking for next in DogeGo. But big Doge moves, all bets are off. This correction could be over. That's how I'm looking at it. For me, though, I need to trust these patterns and think that, we are likely, unfortunately, to see a shallow bounce and then continue lower. And the support and resistance level, I think we might just do that shallow bounce to is kind of here. We've got this previous double top at 0.3, 0.299. So let's see, back above 0.299, let's look for a retest of the highs and hopefully we keep going, but potentially it just may be a shallow bounce and continue lower in DogeGov. Forest is another one that I traded really nicely last week. Pretty tricky. Let's talk about here we go, Forest. Now, what I saw in this one that I liked the look of, this was a really good level in terms of fib retrace levels and stuff, but what I liked is this bottoming pattern we kind of made here. It's not the greatest, but if this was a head and shoulders pattern, what I liked about this was, I'm going to take this off for a second. What I liked about this was this, yeah, it was a nice breakout anyway, and this was the first target. This first target was 50% from this high to this low, and I thought that that might be trouble, but if we could find support, we could keep going. And what, so from here, so whenever you trade, whatever pattern you're trading, previous highs and lows, when you retest them, are always a bit of a tricky level, because the people who bought late, like for example here in Forest, the people who bought up here, who bought it late and then endured this nasty, 50% shakeout before it got back up there again and were offside that whole time. As soon as it comes back there, they go, oh, thank God I'm getting out of this. And so this is why you see these, especially in these meme coins, these double top patterns and double bottoms. And if we look back in Forest, we see this quite a lot. So no matter what you think of it, here we are. We're kind of back testing this trend line here, but we retested this 50% level, and this level has been resistant. So we had a nasty, we got all the way up here, nasty 50% pullback, but in three waves. So this was really nice long for a retest. But when you do that, your first target is always going to be a retest of these highs, which we again failed and reversed at. And now we are doing a bigger pullback. If we are doing these choppy three-wave patterns, very often the most likely retrace of a choppy three-wave pattern is a 786 fib. So, in fact, in this case, if your first swing is to the 61.8 and your second swing is to the 786, then it's a bullish Gartley pattern and vice versa, a bearish Gartley pattern. It's been around since 1922. It's pretty reliable. And in this case, in Forest, this is potentially, this three-wave swing that we've done from the high that we made is a bullish Gartley pattern. So if we say from the low here and on the 20th of November to this high, we're bouncing from the 786 fib. Let's take this away. Our confirmation level that this is playing out and we're going higher is a backtest of the 61.8 here in Forest. So that's our resistance level at 0.032, and above it we should bounce to at least this 38.2 level, which is at 0.04. But because but for a better target, so our minimum target is 0.04. But because we measure swings, if we go from this low to this high, project it from here, our second target was more likely, which is the back test of this 236 fib here at 0.045. And if we get above it, then our next swing is going to be all the way to this bigger, sorry, doing it wrong, is this equal measured move next, which moves up to 0.057. So then we go big 1, 2, 3 up, 1, 2, 3 back, and then our final swing, third swing, up to 0.057. And if this is super bullish, we'll come up and retest the highs and do a 1.618 of this swing. So potentially this is a pretty nice bounce level for Forest, shaking everybody out, shaking them up and down. And that's what I'm looking for, and this is what I'm trading. So again, let's put fib level. I want to make sure that lines up around that 61, yeah. 0.57. So we've got two long targets here if we can bounce from here. So if we can hold above 0.032, first target is going to be 0.0455. Second target would be 0.057. It's not going to go in a straight line. I shouldn't draw like that. It's not going to go in a straight line, but ride the waves. That's where we should get to in Forest. So Bert was one that I traded at the weekend and that I posted. This is a really good level about those measured move levels, because I thought this really nice long-term consolidation and a breakout, and I was measuring my targets from this low to this high, projected from this low here, and I was also using kind of these fib levels. Now this is a really good one because on the 4 hour it looks like we did it, but here if I go to the daily, unfortunately this looks like we've done one of those 3 wave measured moves because we couldn't close and hold above 0.099, basically 0.1. That was the equal measured move level and we couldn't close above it. So because this now looks like on the daily one of those 3 wave moves, unfortunately the most likely, just as we saw in Forest, that we're going to bounce through the levels, but the most likely retrace is the 786, which is down here at 0.058. So for me, when I was riding this high, the first indication to get out was closing back underneath, on a lower time frame, was closing back underneath this 236 fib from the low, because that always says to me, and I know that that's quite a lot to give back, but as soon as that breaks, which it did here, we are no longer trending higher and we are likely to see a bigger pullback. So yeah, again, I think we have made a big drop. I think we'll see a 3 wave measured move. I wouldn't be surprised if we saw something like this and then another swing lower, and 0.058 is where I'm going to be putting an alarm, and I'll look at this one again for a long entry. Okay, let's take a look at a few more that I have been trading. Honestly, you've got to be, it's really hard, it's really easy to believe in these that they're going to keep going, and it's really important to at least take partial profits, like keep a bag if you want to, but at least take partial profits because they can come back hard. Here's another one, TAI, T-A-I. Some of these AI meme coins as well have been really interesting. I'll talk about some more. So TAI, this is, when these get listed on an exchange, quite often you can't see, for when you draw fib levels, you can't see what happened before it got listed. There's not that much chart history. And so when I do that, I kind of reset it. So I put this back to 0. So from here, you can see it's not from this candle low, but I run it from 0. So if I measure the moves here, here's our first really sharp rally. So here's our first swing to this high that we made a month ago, 3rd of November. And measure from here, and so here we have reached this equal measured move level in this one. So I'm not actually in this one, but it's one that I'm watching, because if we make a nice little 3 wave pullback to back test this 61.8 level at 0.029, that actually means that we are still in an uptrend. However, this is pretty important resistance, so I'm watching this to see what happens here. Again, if we apply the same rules that we did in Bert, so we go from measure from this low, from 0 to this high, back underneath this 236 fib level, 0.32, we're likely to see a bigger pullback down to 0.26, but we don't want a daily close really underneath that 236 fib. If we keep going though, if we, because at the moment this is just a pullback in a potentially really strong uptrend, if we go above and we hold above 0.041, 0.0495, and then 0.6 next for TAI. Okay, got a request. We're going to look at Tin Hat Cat. So this is another one. This has been around a little bit. longer. This is Tin Hat Cat on Phantom. And again, if I measure from the start of this, from 0 to this high that we made in April, then, and I project it, we've made a very nice rally, 3-wave correction, lots to like about this. Measure from this low, you can see that we reached this 1.618, and I would normally go, wow, this is, perhaps this was a nice big wave 3. We can see, I think, potentially 1, 2, 3, 4, 5 waves. The problem is this 5th wave was really extended, and the problem with that is, as you know, in a pullback, when you've got 5 waves up, you can come back to the bottom of this wave 4 to find support. Also, if I look at this on a monthly, because we can see that November, where we started is where we finished. This was just a volatile go nowhere month. But the most important thing in this one also is that if I measure from this low to this high, we couldn't close above that important equal measured move level at 0.57 in Tin Hat Cat. So that kind of says to me that this may have just been a 1, 2, 3, and in which case the most common, I'm not going to say it always goes away, the most common retrace is a 786 fib. And if we go back down to the weekly, that 786 fib level is at the bottom of this wave 4. And so here we've done our first swing lowest as a 61.8, this bounce. Again, this is a little bit like Forest that I looked at. If we make a bullish Gartley pattern here, so here's our first swing, bounce, second swing, the key level that we need to put an alarm would be looking at buying this is at 0.2069. I don't know if it's going to go there, but at the moment it's looking pretty. So, the key question is this a great place to be buying? I think that we might find support at 0.39, which would be the weekly 20 moving average, and we're at a 618 level. So there's 2 support levels in this one where I would looking at be buying the pullback. 0.39, but the really bullish pattern, the equal measured move, and the Gartley pattern would be down here at 0.2 in Tin Hat Cat. So that's what I'm looking at. Clearly, a close underneath 0.3, what's going to be your warning that we're going to keep falling. So key support for me is this 61.8 level here at 0.39. A close and the weekly 20 moving average. And you can see that this weekly 20 moving average, when we're moving higher, is trend support. It was trend support here, September, October, and again at the end of October, November. So this would be, if we close underneath 0.39, we're going to see a bigger pullback to 0.2 in Tin Hat Cat. Finally, let's talk about Fibula. This is a cute one that Bruce, the #1 Instagram cow. I had some really nice trades in this one, so I'm always looking for the 3-wave pullback to play out and to buy it. So, and this is a good lesson in patience. So if I measure, so this one, when I look at it, simply very nice 5 waves up, 3 waves back should be a ideal long entry right here in Bruce. But it's gotten a bit choppy while we're building a little bit of a base. Now, if I measure from this high to this low, project it from this lower high here on the 28th of November, the equal measured move level was here at 0.24. I bought it, we bounced. The confirmation level when you draw this equal measured move pattern is closing back above the 61.8 here, which is where we failed. So this doesn't mean a bearish, or it just means you've got a range trade going on, right? And so we've done that very clearly, and here we are, we failed again at this 61.8 confirmation level, which is at basically 5,000. And so we're still sideways, and I think unfortunately back to the bottom of this range again. I'm wrong about this being a bullish pattern. If we don't hold the lows of this range, which are at 2,400, and so it's pretty choppy range, but I'm still pretty bullish, and if we count this as 1, 2, 3, 4, 5, this is the bottom of wave 4. This was, this was a really valid long setup that failed at the confirmation level. Hopefully, a nice little higher low here, an inverted head and shoulders pattern. That will be the bullish pattern I'm looking for. But I'm out of this again, waiting to see what happens when we retest the lows at 2,400 or a kind of lower time frame bottoming pattern in Bruce. Okay, I hope that's useful. Let me know if there's anything you're looking at.